Hello, everybody. Thank you, Katie. What an awesome introduction that was. And yes, second day, it's a little bit weird, but great to be on stage. So I'm James Harris. I'm the Chief Commercial Officer at Zodiac Custody, which is a FCA-registered custodian based here in the UK that is also backed by Standard Chartered Bank, Northern Trust, and SBI. So thrilled to be joined here by Jenna Wright, MD of LMAX Digital. LMAX Digital have been supporting the institutional ecosystem here out of the UK for a very long time, and we're very grateful for them. They're consistently highly rated in CCDATA's exchange benchmark review, which is very well followed, and institutions pay a lot of attention to it. And LMAX is very much an institutional venue of choice. So I've got some questions for Jenna that we've prepared, I think, and we'd love to have some audience questions if we've got time. So please do put some questions on Slido. We'll try and tackle them if we get a chance. Jenna, here we are again.
Yep.
1 year on. Do you want to say hi? Introduce yourself.
Yeah, hi. For those of you that don't know me, I look after LMAX Digital, the spot cryptocurrency exchange within the LMAX group. We are exchange operators at the core in foreign exchange. So we've been doing that since 2010, and we launched LMAX Digital, the institutional-only crypto venue, in 2018. So 5.5 years in crypto, veterans.
Absolutely.
Yeah, and here we are.
You've been running that since the start.
I have.
Seen it all the way through. It's
yep.
amazing. So look, a lot of change in the last 18 months. People have moved, that kind of thing. Firms have blown up. But of all the developments, which have been the most significant to you at LMAX Digital? Have you found any sort of positives in this bear market?
Always positive, James. Yeah, look, it's been the reputational contagion attached to many black swan events that took place last year have had a knock-on effect in terms of institutional adoption. Would be naive not to accept that. But I guess the good thing about what we've been trying to do is operate in a regulated environment like we would in FX and like we have done for way over a decade now. So I guess in the last year, it's provided, look, we launched in a bear market and we're back in a bear market. So yeah. It doesn't feel like...
We seem to be often in a bear market. But
and if you operate in capital markets, you should be used to these cyclical trends. So it's not concerning for us. I guess having a bit of free time where you're not running around like crazy lunatics in 2021 trying to support the trading volumes, you get a bit of time to get your operational setup and in the best position it can be. So this is not new news that we should operate in a horizontally integrated model. No. But the reality is the space has been operating very much vertically for our entire 5.5 years in space. So by that I mean it was okay and normal, and the infrastructure wasn't there for the likes of an exchange to do every part of the role of the ecosystem. And I think that was very obvious in November last year, and which caused the problems. You've got trading arms, exchanges, custodians all doing the same thing under one roof, and no separation of powers.
That's right. So you get this concentration of risk in individual entities, like we saw with FTX, effectively conducting the entire trading stack of looking after assets, trading assets, lending assets. Which is anathema, isn't it, really, to TradFi institutions. They can't do that. And there's an irony there, I think, when you look at the way that TradFi currently trades. It's actually, at the service provider layer, quite decentralized. You've got various different firms doing various different functions that they're very specifically doing. So do you think the market's going that way, digital assets?
Yeah, I mean, it's difficult. I think when we see a flurry when we move towards, real money asset managers entering the space, they will only be able to operate in that fashion. So to your new employer, we partnered with Zodiac Custody this year to work with them on the off-exchange settlement piece. We want real money asset managers to feel comfortable that they can park their funds in a custodian and execute on the LMAX trading venue. And the two are very separate. And I think that is the model going forward. Obviously, we would like the ecosystem to come together. It becomes quite difficult as a venue to integrate to every custodian. So the more we can all come together to work together, that provides the infrastructure that asset managers and the likes are used to and are comfortable with. So we definitely need to push more down that route.
Definitely. I mean, I heard one of the previous panelists talk about decentralization, and that's a very interesting theme. It's a long way off from an institutional perspective. But I think here now, on the institutional side, people need to be able to be set up to trade in the way that they're accustomed to, but also, the funding question, right? Institutions don't have the capital until they have it, and that's when they can then match off trades. So they can't just pre-fund a trade. It's not easy to do. So thanks for the hat tip. It is great to be working together again. So just back to my former employer, CCDATA, they put out a lot of research reports, and one of the things that they put out is a report that looks at the volumes that all of the exchanges trade. And it probably comes as no surprise that the volumes are down across the board everywhere. How do you feel about that? I mean, can you give a little inkling as to how your clients are feeling? Have clients gone, coming to the table, trading behaviors? Just tell me how it looks from your perspective.
Yeah, look, I think lack of volatility translates to a lack of volumes. Our position in terms of share of, who suitable peers that we'd benchmark ourselves against, we're happy with our results. It's a tough one, but I guess if there are no arbitrage opportunities, there are no directional trading opportunities. We're in a high interest rate environment. There are other ways to generate yield from trading spot crypto today. Where it's been great for us as a group is that suddenly the crypto firms that were trading a ton of crypto and are trading less, they now have FX requirements. So twofold. One, the banking issue, and probably should have highlighted that on the back of all those Black Swan events last year, when you thought it was over, suddenly the market structure, fiat rails were over too. So it just kind of had a knock-on effect. So we're playing quite a key role there in providing the crypto natives with the FX piece. And then also in terms of lack of trading opportunities, actually there have been opportunities in the more exotic currencies. So providing an FX hedging venue for those guys has been really important too. So
what kind
good
of
and bad.
exotic FX pairs are you talking about?
Latin America has been interesting. Predominantly there. So
interesting to see the jurisdictions that actually care about sound money and perhaps are getting their money debased. There's actually interest at the fiat currencies versus digital assets.
Exactly, and then once they start looking at the FX venue, they look at, you also do commodities and indices, and a lot of these clients have market making strategies. So ultimately, they're making a switch from trying to market make other asset classes as well. But for our group, LMAX Digital has been the fastest growing exchange of the 5 that we operate today. We've now traded over $1 trillion in crypto. Wow. Which is 37 million Bitcoin equivalent. And I think the metric for us right now is not the volumes, because it's an apathetic market in that it's all really quite flat and boring. It's really about client onboarding. And we've hit a mark at 750 clients onboarded over the last 5.5 years.
Those are institutions.
We're really pleased with that. Institutional only. We don't do retail in any capacity. Our access to retail is onboarding a retail broker who has millions of end users, but we just face that one counterparty. We get comfortable with their AML, KYC, and then just service them. So it means we can be better service providers. And the number that I look at really on a monthly, weekly basis is, we continuing to onboard those clients, because that's really key for us. And it's looking good. So, we carry on, we're happy with that, and that's the metric for me right now, rather than the volumes and the revenues.
Nice. We've mentioned FX there. What about precious metals? People often sort of put together gold and Bitcoin as being sort of a currency debasement hedge. LMAX trades everything, obviously, the broader group. Are you seeing increased interest in metals, and are people referencing its digital assets at all? I
think we see a ton of gold. I don't know if the link right now is with crypto. And indices, surprisingly, seen an uptick there. But back to my point, a market maker can make
like
a price
S&P
in any
500,
asset class.
that kind of stuff?
What was that?
You mean, sorry, like S&P 500?
Exactly,
okay.
yeah, FTSE 100.
We have some indexes in the audience today, so that's a great hat tip over to Market Vector over there. So great to see that the traditional products are still very, very popular.
Yeah, I mean, look, Bitcoin's holding up right now. It's had a very good September versus the rest of the asset classes. And September, I think, historically is a bad month. So we're doing okay, and now we're moving into
we held on,
October.
didn't we? Everyone
Yeah, we've done okay.
Yeah, and now it's October, apparently. We'll see.
Yeah, okay. So there is hope.
Yeah, well, ask me again in a month.
Yesterday was exciting, guys. We see a bit of a move.
Yeah, exactly. Well, you got your
We
volatility.
welcome those days.
Yes, exactly.
Yep.
So I'm sure your volumes ticked up. They always do when volatility ticks up, trading picks up, because as you say, there are more trading opportunities. Right, so obviously CCDAS's event today. Conference season is back in full force, and you've been traveling a fair bit, haven't you? All over the world, probably 3 continents at least in the last month. Can you give us an idea of how institutions tell us where you've been first, but also how the institutions are thinking about crypto there, and maybe a little bit of what you think about the regulators in those areas?
Yeah, sure. So much to the dislike of my children, I have been on all those continents over the last few weeks. Singapore for me was very exciting. I haven't been there for a long time, and the buzz around the Token 2049 event, real client leads, real good content, progressive regulatory approach from the MAS, the tier 1 banks that are engaging with the MAS, for example, is huge, right? We haven't been in a position to have tier 1 banks looking to onboard firms that are regulated in Singapore or Hong Kong. So that's huge. And I think that is the start of a knock-on effect for, institutions paving the way. Obviously, we are all preparing in some way or another to be ready for MiCA. So setting up in Europe, again, as part of the separation of duties in our business, having some parts in Europe, some parts in Singapore. Maybe we'll have some parts to remain in Gibraltar. Yeah. A lot of planning and strategic decisions going into that at the moment. And then, of course, look, we are headquartered in London, so if the UK and the FCA do their thing, I think there's a really powerful signal that we will have a framework.
Yeah, the soft whispers are there, aren't they?
Yeah, Treasury consultation, regulating activities rather than the asset class is really important. Yeah. And we welcome that. So look, I think just waiting on feedback, getting news there, and of course we'll do everything to be regulated here. It's the hub of the group, so we definitely want the crypto piece to sit in London as well. Yeah,
so to summarize, Asia throbbing, going extremely well, and euphoria is high, institutions are looking at it. Token 2049, I wasn't there this time, but multiple accounts tell me how exciting it was, which is fantastic to see. I think Asia will be a crypto hub. Europe has this framework, which is, it's tough in parts, and there's things that are a little bit weird, let's just say. However, it's a framework, and something we can work with. UK framework possibly coming. I notice you didn't talk about the US, so maybe there's a reason for that, but let's try and speak about the US. I know it's been problematic for digital assets. A lot of people there are pinning their hopes on this approval of the spot Bitcoin ETF. How significant do you think an approval would be? How are you positioning yourself? Like, what does it do to the market, and then to you specifically?
Yeah. So look, regulatory piece in the US is challenging. However, it's undeniable that I think it's 50% of the world's assets sit in the top 3 US custodial banks, right? So we mustn't ignore the fact that the US is very important to us, to the industry. Yeah. And look, we think that it's inevitable that it's not if, it's when the ETFs get approved. Right. But slowly, I don't think we should assume that we see a 100K Bitcoin price on the back of the spot ETF approvals.
No God candle? No? That's a shame.
I think it's a 12 to 24 month projection from the point of approval, if I'm honest. Yeah. Slowly catch your monkey. Yeah. But it really should be the catalyst for institutional adoption. It's giving the institutions the infrastructure that they feel comfortable with. Yeah. we're all creatures of habits. So we like to trade how we usually trade other asset classes, and bringing crypto into mix there, I think, will be significant. So for us, we're, to your point earlier, we are a constituent to most of the indices that will be supporting these many ETFs that have been filed.
Yeah.
We're a regulated venue for execution.
Yeah.
And likewise, we want to position ourselves to be a tool for surveillance.
Yes.
The listing exchanges, if they do get the SEC challenge potential market manipulation, we want to be one of the venues that can be the source of truth for what really happens. So
sharing the information.
Yeah. So positioning ourselves there to be an important part, the bedrock of the ETF space is a big focus, because we are institutionally focused.
Yeah.
That has to be sort of the route we take.
No, I think it's very interesting. I mean, people might say, hold on a minute, what's the difference? Because you've got these, we're talking about spot ETF here, but there are already these ETFs based on futures. Well, the futures are based on the CME, and the CME is already a venue that everyone's comfortable trading with, all the institutions. A rubber stamping of the spot ETF will rubber stamp the next tier down of digital asset exchanges, of course, of which you are one. Yourself and Coinbase, you're very much in that kind of echelon. And I think that's the key thing, because then all of your Wall Street and Main Street banks have to be connected to these digital asset exchanges. Not just the CME, where everyone's already got a connection, but all of them, right?
Yeah.
As in, all the ones that pass the muster of the indexes.
I think it's a nod from the SEC as well, when they do finally approve these, that they approve the asset class, and it should be the start of the knock-on effect of the regulation. So we get the real money into the space over time. And then I think it gives confidence to those in the market and to build more.
Yeah.
Whereas now everyone's, building, spending a lot of time and effort and resource on building what we think is happening.
Yeah.
You get that over the line, and I think the confidence sort of boosts from there.
So briefly back on the US then, I think there's a tremendous opportunity for the US to say, well, listen, we can approve this finally. We can fight other battles. Some of the other projects are probably easier to go after. Everyone here is trying to do things properly. Most of the people at this conference are talking institutional language, trying to do things the right way, fully regulated, fully compliant. I think the US regulator will just get tired of this and say, you know what, this fight is done. Let's move on, and it will give them a chance to basically save face a little bit. When that happens, perhaps the US is a little bit more attractive, because we've noticed a lot of people leaving the US to build elsewhere.
Yeah, we have, but I think it's temporary.
Yeah.
I think there are a lot of trading desks that sit in New York, and it doesn't feel right today.
Yeah.
So let's get over to Singapore and place the hub there for now. But honestly, I was there a week ago, and I'm there twice more in the next 3 weeks.
Yeah.
It's still happening. There are still big events taking place. We can't rule out the States as being mega,
I mean,
right,
look,
for us.
If you were to personalize the States, you'd say it's depressed at the moment.
Sure.
However, that doesn't last long. My experience of the US economy bounces back very hard, very strongly, gets its act together, and of course, it's a wonderful place to do business. So I think the US will be fine, but in the meantime, of course, you've got these other jurisdictions lobbying, jockeying, to try and get the vanguard seat for digital assets, and who wants to be the next digital asset hub.
Yeah, it's competitive.
Yeah.
You're kind of missing out if you don't try and play in the race. So Singapore was sensational,
I know,
if I'm honest. It was a shock to me. I hadn't been there for a while, and it's thriving.
Nice. Well, looking forward then, crystal balls or no crystal balls, your choice. I think several drivers will help digital asset markets. I mean, obviously we've got the cyclicality linked to the Bitcoin halving. Bitcoin halving is in April. I think that there's a lot of correlation between digital asset price movement and currency debasement, and so the macro picture probably is important. But how are you thinking about things in the next 12 months? We've got a couple of minutes, maybe talk about how you're setting your stall out. Do you think there's going to be a bull market? That kind of thing.
Yes, I think there will be a bull market.
The when?
I don't think it's like, I think I said it earlier, I don't think the ETFs translate to the bull market. I do think that it is the first thing in a while that will trigger money. And for us, I guess the focus is on being pragmatic about the positioning of ourselves, embedding ourselves as much as possible. Regs are important, and encouraging, the credit intermediation piece hasn't changed for us. We're still very much of the opinion that we need credit intermediation. I think the regulatory piece will encourage that. We're still missing what we have in the FX markets, a prime brokered model, whereby little old LMAX doesn't have to intermediate credit and use its balance sheet, which is obviously limited versus what the banks can do for us. But we're seeing...
It's beginning to emerge, right? I mean, you've got the likes of Hidden Road beginning to play.
Exactly. You took the words out of my mouth. They're doing a
probably both of us work with.
doing a fantastic job of intermediating the space, but we need more of that. They will grow their balance sheet, but we need many PEs.
It's for those of you that are entrepreneurial and can find backing, it's setting up a PB right now, or at least diverting some funds towards moving a traditional PB to look at digital assets. Probably a good business idea. So
exactly what Hidden Road have done, right? So if there's a few more of those coming into space, we welcome that.
Margins are still higher in digital assets too. So, although you may be feeling the squeeze at times. But look, I think that's all we've got time for. So I really appreciate the questions. We've managed to weave a few of those in. Jenna, thank you so much, as ever.
Pleasure.
Are we doing this again next year?
Sure. Thanks for having me.
Thanks, everyone. Appreciate your time. Cheers.